Welcome back. Now, in the first quarter, South Africa's GDP growth is just above the flat line at 0.1% from 0.4% previously. The agriculture, forestry and fishing industry was the main positive contributor to the print, while manufacturing and mining weighed. Maarten Ackerman, chief economist at Citadel, joins us with his analysis on the data and what it suggests for growth moving forward. Maarten, thanks so much for your time this afternoon. So marginal growth of 0.1% in Q1 on a quarter-on-quarter basis. We are seeing this from growth of 0.4% in the fourth quarter of 2024. This comes as no surprise, right?
Yeah, it's, we know that we're in this growth trap, unfortunately. It's slightly better than expected. The market expected a minus 0.1. We printed a positive 0.1, but yeah, call that almost no growth for this quarter. If you look at the annual numbers, so that's for the last 12 months to the end of March, that number is 0.8. Sub 1%, and we've been stuck there for who knows how long. And the problem is that if you compare that number to the growth in our population, that's almost double that number. So that's what I call a per capita recession. So we're adding more people to the economy than goods and services. And as long as we can't grow faster than the growth in our population, we're going to have severe unemployment, social issues, and so forth.
Yeah.
And that just makes the point why it's so important to fast track and implement the reforms that's currently in the pipeline. It's not like they're not there, but to actually remove some of the large remaining hurdles to get some of those sectors that's really struggled to start participating and adding to economic growth.
And talking about some of those sectors that have really struggled, we've seen a downbeat showing from both the manufacturing and mining sectors in the first 3 months of the year. What has been the issues on that front? Is it the short bout of load shedding we saw in the first quarter? I know we also had water issues as well. Is it more of those structural sort of issues weighing on the sectors?
Yes, unfortunately, again, if you look at the last how many quarters, always at the bottom, you've got mining, manufacturing and construction and a couple of others. Those are the sectors that's probably more aligned on some of the structural issues that we are dealing with. Electricity, now fortunately we're turning a corner there. But like you said, water, logistics, the rails, the ports, and that's where we need to really get things going, because those sectors are also the bigger job creators.
Yeah.
So if we can get them going, they will not only create jobs, but they will create jobs for the skill base that we've currently got in the country, for the people that's unemployed. And so that's a clear sign that, despite some of the reform that's in the pipeline, we're not seeing the results yet, given the fact that those sectors are under severe pressure.
And on the other side, we had the agri sector being the biggest contributor and benefiting from good rains during the first 3 months of the year. Just your sentiment around that sector, Maarten, considering that it may also face some external shocks, including diseases as well as extreme weather conditions.
Yeah, so agriculture is a very resilient sector in South Africa. It's been the fastest growing since 2010. We had another double digit, like you've alluded, almost 16% for this quarter. That comes on the back of almost 17% in the final quarter of 2024. But you're 100% right. They face similar issues, in terms of weather on top of everything else. Also issues at the ports to actually export, transport, and currently they, on the front page in terms of our relationships with the US. Exports under the AGOA agreement to the States. So we also need to keep in mind that a lot of the tailwind that sector experienced during the first quarters was actually front running, exporting more. There was a 14% increase in exports to the US before the tariffs kick in. So some of that is also going to fade going into the second quarter. And also very importantly, it used to be the smallest sector in the economy, but probably one of the bigger job creators. and now it actually took over. It's now slightly bigger than the construction industry. The construction industry, unfortunately, slipped to the smallest industry in the economy at this point in time.
And that was what I was about to ask you about, around issues of export, and if we're seeing front-loading taking place on the back of uncertainty around the tariffs. But as you've alluded to and mentioned, that is the case, and we'll probably start seeing growth in that sector slowing down moving forward. Consumption and household activity continues to be resilient, Maarten. Are we just seeing, the two-part withdrawals at play, as well as those lower interest rates and low inflation at play?
Yes, so this quarter was slightly weaker than the last one. So only a 0.4 versus the 1.1 in the final quarter of 2024. That stronger quarter, the back end of 24, was definitely as a result of the two-part system and all of that, some of that money going into consumption and spending. 100% right. While a big part of the economy is not growing, mining, construction, and those that we spoke about, this remains a consumption-based economy.
Yeah.
So we need the consumers to be in a position to spend. About 65% of our economic growth is driven by the consumers. And that's why hopefully the interest rate cut we've seen earlier is a bit of relief for the consumer going into the second quarter. But again, the consumer on their own is just not enough to keep this economy afloat. And we do need those other sectors to start kicking in and playing a bigger role as well going forward.
And just with those structural reforms taking time to actually really filter through into the economy, and where we can start seeing a turnaround and growth taking place, what is your forecast for growth for the year moving forward? Will we be able to achieve some of these forecasts set by Treasury? They've pegged growth in at 1.4% for the year. The SARB, in the meantime, pegging growth at 1.2%. Is that achievable, looking at the growth that we've posted, and also just looking at some of the figures when it comes to manufacturing and mining for April, also downbeat?
Yeah, so before we talk about growth, gross fixed capital formation, part of today's print, was down 1.7%. That's a very important metric, because it shows whether there's actually investment going back to the economy, private and public sector. So when we talk about all these reforms and the fact that the doors are being opened for the private participation, on the ground we don't see money flowing into that space yet. So until we see that, it's very difficult to see the growth numbers that you alluded to, the numbers that Treasury and Reserve Bank is putting on the table, more than 1%, 1.2, 1.4%. So our growth assumption for this next 12 months is still sub 1%, about 0.8. That is our number. But then we do see that over the next 2 to 3 years, with all of the reform that's in the pipeline, with private sector sitting with the ability to spend, they've got a lot of cash on their balance sheets, that the economy can actually get to more sustainable growth, 2 to 2.5%. But the reform implementation is so important, and that's why we keep a very close eye on that fixed capital formation number. We had quite a number of positive quarters during the solar boom. But since then, things were really moving backwards again. And we need to get that number back to about 25% of GDP. Currently, it's sitting about 15%. So there's still a lot of room for investment going back into the economy. So until we see that, it's very difficult to see economic growth, let's say north of 2.5%. And that's why we're still quite cautious on our growth assumptions for the next 12 to 18 months.
All right, Maarten, let's leave it there. Thanks so much for your time and unpacking that GDP for us here on the show. That was Maarten Ackerman, Chief Economist at Citadel.